Hi everyone. I'm Mark. I'm from HashKey OTC desk. I'm head of trading there. I just want to give a quick introduction to the deck, to sort of the desk before I begin my presentation proper about managing emotions in a trading in a bull market. Let me start by giving a quick introduction. So HashKey OTC serves as a trusted partner in the world of digital assets. We actually have been around since 2019. We are in Singapore. Have a core focus on providing institutional-grade digital asset solutions to high-net-worth individuals, family offices, funds, and AIs as well. We are actually very committed to regulatory compliance as it's part of our brand name, and we have recently obtained in-principle approval for the MPI license from the MAS. This license enables us to offer digital payment token services in Singapore, which also kind of reinforces our position in the digital asset landscape and gives us a little bit more credibility, I hope. So HashKey OTC, we offer a comprehensive full-service approach to digital asset needs. The team consists of actually a number of individuals who come from traditional finance background, and then we have a deep understanding of Web3 digital asset space as well. So we've been around and experienced for some time. We are also designed for AI and II, so the desk is specifically catered to accredited investors. That's the equivalent of PIs in Hong Kong. So what we do is we have two types of trades that are very common to the desk. One is a typical fiat to digital asset bridge. That means sort of on-off ramp services that is currently known in the crypto space. We are able to offer relatively quick settlement services, and we also offer block trades. What that means is if you have a sizable trade that you like and you're worried whether it will affect the market or not, we can help you with that. We are also offering bespoke services, which means that we will sort of listen to your needs and try to tailor a solution. We currently offer up to close to 50 assets in a token space, trading, and the process to list a token on the OTC desk is actually quite rigorous as well. We have to do internal risk review as well as a legal third-party opinion. We are able to offer relatively competitive prices, and we are able to offer relatively quick settlements because we are using Standard Chartered as our fiat banking partner, as well as the Greenlink Digital Bank. So in the next month, we will have an upcoming feature which will allow clients to trade directly via API as well. What this will allow is that clients are able to connect with us on a lower fee, on a lower minimum requirement basis, and they're able to just process more trades overall. And our ecosystem, we are connected to a number of reputable exchanges, as you can see. And lastly, this is a quick slide to summarize why investors choose us. I think the landscape has changed since 2022 and 2023, and the main reason why I say it's important is because of reputation and brand name. It's all about regulatory control and environment, and we are a trusted partner in that aspect, amongst everything else. Now, going on to my slide proper, before I begin, I'll give a quick introduction of my background and where I came from. So I was in the buy side. I was trading a number of different sort of products in traditional finance space, including equity indices, such as the Nikkei, as well as Forex. Specifically, I traded NDS for about 7 to 8 years. So I was mainly focused on the Korean won, Indian rupee, a lot of the controlled currencies, because that's where basically the biggest margins were to be made. And coming to this topic, I think the summary of what I'm going to talk about is about managing emotions. What is important, I think, is a bit of a trading philosophy, like how we can look at the trades internally. And the next part of what I'm going to say is whether Bitcoin is in a bull market or not. I'm using Bitcoin as like a bellwether for all cryptocurrencies, given that it's the majority of the index in terms of market cap. I'll also talk a bit about main emotions that people experience during trading, as well as some techniques to manage these emotions. And I'll talk a small quantitative aspect about sizing and risk management. So starting with trading philosophy, I think the goal is for us to generate winning trades consistently. It's not actually to have one very good trade that wins it all, contrary to what people think. It's really about replicating a winning process and continue to replicate and keep trading well. So what that means is that you have a good thesis, you have a good back-tested strategy, you have a good process, and you have trading as close to an AI as possible, like a robot. You have emotional detachment, you cannot be too tight and married to each single trade. So one thing I think is important is that approximately 70% of lottery winners do not do that well and are unable to maintain their winnings after 7 years. So what that means to say is that, I know it's frustrating for traders if you have a good process, you do a lot of research, you do technical analysis, fundamental research, everything, and then you plot your trades, and someone sort of buys a meme coin and something like a dog with a hat, and then it outperforms you massively. It's frustrating, but there's a lot of survivorship bias in trading as well. So you hear the success stories, but you don't hear the stories of people not doing as well. So let's move on to the definition of a bull market. I took this definition from traditional finance. So what we can see is that it's very tailored to TradeFi products like a stock index. They have 5 characteristics that I thought was notable. One is an extended period of rising prices measured by major indexes. So I'll use Bitcoin and Ethereum as a proxy for these. Then another one is a 20% increase over a 2-month span or more. Right now, I would say Bitcoin and Ethereum has a slightly higher volatility or beta as compared to stocks. So I would say it will probably be closer to 60-70% if we were to sort of infer it and replicate it in the cryptocurrency world. Then, of course, high investor confidence and optimism, higher demand coinciding with reduced supply, as well as strong fundamentals and profitability. All of these are sort of characteristics to decide whether or not something is in a bull cycle. And I took Bitcoin specifically to sort of analyze whether or not we are in a bull cycle. So extended period of rising prices. As you can see from the chart to the top left, that's from Binance. Clearly, it's one line up, right? It's really rising in the last 6 months. And I think that fulfills the criteria required. Second one is a 20% over a 2-month span or more. I started preparing, I sent the slides for this presentation on the 4th of April, as you can see. So it's even higher now. And we have a 140% increase in the last 6 months, which really is symptomatic of a bull run. We also have high investor confidence and optimism. I think with the advent of the US spot ETF approval, we have an increased ease of investments. You have professionals and wealthy individuals who are able to just directly one-click purchase it through stocks, through a stockbroker, rather than creating a digital wallet, going through buying a Trezor, buying a Ledger, buying a cold wallet, etc., etc. It's just so much easier for them to be confident about this whole process with BlackRock backing it and some other big names. And a study revealed that out of about 10,000 surveys, about 84% were optimistic about trajectory about Bitcoin and Bitcoin prices. And there's also been a resurgence of KOL, sort of online influencers, as well as social media presence, all within the cryptocurrency world. A lot of people who are left in the 2021-2022 cycle are suddenly back, and they are also back to sort of talk about their coins. Another factor and characteristic of a bull market is higher demand coinciding with reduced supply. So I think this one is very obvious for us because there's an upcoming halving, a Bitcoin halving in which mining rewards will be halved from the current 6.25 block rewards to 3.125. And this sort of coincides, this is a definite reduction in effective supply that's coming to the market on a daily basis. Then the last one is strong fundamentals on profitability. I think Jupiter gave a very good presentation about sort of fundamentals and profitability of Bitcoin and Ethereum. I used the bottom left graphs as a proxy as well. On the bottom left, we have the miner transaction hash rate. So it's taking a lot more cost to mine one BTC, which some use as a cost projection, as in they feel like the Bitcoin price should be proportionate to the cost of mining a Bitcoin. And on the bottom right, that chart, specifically that talks about the fees received from mining and transacting in Bitcoin. And with the advent of ordinals and recent Bitcoin-related NFT products, average transaction fees paid have increased. So now that we have clearly, I think, quite confidently established that cryptocurrencies are in a bull market, let's talk about some of the main emotions of trading within a bull market. I summarize it to these 4: fear, regret, hope, and greed. On the bottom right here, you can see that there are a number of other emotions, but I think majority can be classed within these 4. And I'll go through each one in terms of definition. So for fear, everyone has experienced fear sometimes in their life, right? I'm sure. So it's the unpleasant emotion that is caused by the threat of danger or harm. This is a very common feeling that people have in a bear market. Usually it's more relevant then, but there's still some panic, like your asset has just gone down, you bought a meme coin, you went to sleep, and then it's down like 60, 70% or something. There's a lot of panic, there's panic selling, there's basically people lose trading processes, and that's the important part. Like you have a fixed trading plan, and then once it comes to fear and any of these emotions, you start to lose sight of what you're trying to do. You are also hesitant to enter trades. So for example, a good example I think could be when last cycle, maybe in 2021, you have a lot of people who say, oh, Bitcoin is a great asset. When it dips, I will target to buy it around 20,000, 24,000. And when the price gets there, people are very, very hesitant to actually enter the trades, despite their setup telling them that they should, because there's just so much fear in the market. And that's why it impedes good trading processes. Moving on to regret. Regret is, by definition, a feeling of sadness, repentance, disappointment over something someone has done or failed to do. I think the easiest way to describe regret is fear of missing out. So it's like FOMO. So like when you see someone, I should have bought this yesterday, I should have bought this the day before, it's up XXX%, YYY%. That's a lot of regret that humans do when they try to catch trains that have already left. So one example of ways in which it could negatively impact your trading is when you decide, oh, it's very simple. Yesterday I saw it at $10, today it's $20. If I think it's going to go to $30, I can just 2x my size, and then when it gets to $30, I sort of made back my money. But the money that I've sort of missed out on. But it doesn't work that way because there's a lot more leverage that you're using, there's a lot of sizing that you're using, and it's a basic violation of trading discipline. And this results in you buying more at a worse level, which is very counterintuitive to good trading philosophies. So moving on, I'll describe a little bit about hope. So hope is an expectation and desire for a particular outcome and event. It's a very dangerous emotion because it gives you a false sense of confidence. You sort of think like, yeah, I'm hoping that this comes. When it starts to come to the point that you are hoping instead of believing, then that is a problem. So one way people do hope is that they keep averaging into losing positions. So they have a trade philosophy, but they say, yeah, I think it's going to get back to where I started buying at. If I liked it at this price, I like it better, lower. But as Paul Tudor Jones, a very famous trader in Market Wizards, says, losers average losers, right? So this is a very dangerous trading concept. It's very closely related to the human issues of pride, as well as refusal to admit that we are wrong. So this is quite common, and it's very human nature for us to hang on to and sort of average losers. And then we don't consider good risk management principles. And lastly, the most prevalent emotion, I think, in a bull market is greed. So what happens in greed is that people want to have as much profit as they can. They have a desire for more profits. This is driven by a sense of entitlement and a belief that the market conditions will continue indefinitely. And I think a very obvious example was in 2021, 2022. We just keep seeing the moon to sort of irrational levels at that point of time. And it can cloud your rationality and judgment and lead to suboptimal behavior. So it comes to a point that you have higher risk trades. You start doing things without researching. You start saying, oh, it's easy. I'm already way in the money. I should just continue on this trade. What this leads to is there's a lot of round tripping, and then the rest of the emotions start to kick in when there's negative things happening. So there are a lot of times that you want to stay in profitable trades longer, you want to average in your size, you're just not sticking to, people are just not sticking to their original trading plan. So now I'll run through a little bit of techniques that you can use, traders can use to sort of manage their emotions. As we have established, emotions can be relatively dangerous. So one good way is to follow a strict trading plan, to do journalism. So sort of like write down, I entered this trade, I'm going to enter buying this at what price, exiting at what price, cut loss at what price. It's very simple, but it could be very, very effective for trading. And I think it's very useful for macro and discretionary macro trading, as well as positive self-talk. So it's kind of like you got to convince yourself and have some confidence as well. You can't be in the mindset where you're always thinking, oh, I'm going to lose on this trade, I cannot win. Then definitely that will lead to a lot of the other negative emotions coming. And I think the most important tip that I have for managing emotions is to take a break. So just close active positions, walk away from the market, touch grass, take a holiday, see the world differently. I think that will help a lot in controlling the human nature of trading. Moving on, I'll talk about the importance of emotional discipline. Ed Seykota once said, the elements of good trading are 1, cutting losses, 2, cutting losses, and 3, cutting losses. And if you follow these rules, you may have a chance. So I think it's quite ironic. What he's just saying is basically, it's all about risk management. And the good traders that I've seen exist around over time have always been focused on managing their risk and the downside. So as an example, mathematically, if you're down 50% on a portfolio, you need to 2x that portfolio to make it back. And if you are down 75%, you need to 4x that portfolio to make it back. You need to make an extra 300%, which is a very difficult barrier to overcome. So I'll move on to a bit more quantitative sort of analysis about how you should size a trade. And this is about sizing and risk management. Some of you might know this as the Kelly criterion. It's a lot more complicated than it looks. It's a lot less complicated than it looks. So this is usually known for known outcome probability. So if you were to decide how much to gamble on a fixed known outcome, then this is something that you can use. But for trading, I think it's still useful. And I give a brief description of what this means. So F star in the top left is what the amount of trade, the proportion of your trade to size based on your portfolio. So say if you have $100 and your F star is like 0.05, you're supposed to size $5 on a per trade basis. And this ratio and this amount that is optimal for you to size is directly proportionate to two things. One is your WLP, which is your probability of win against losses. If you are more likely to win, then of course you will size it bigger. If you are more likely to not win, then perhaps you shouldn't size it as big. And then the second one is your, if you win, how big is your payout, risk to reward? And if you lose, how negative is your negative outcome? So these are all important factors, and there's inputs that you will put into a Kelly criterion to decide how best to size a trade. And when that happens, I think that's going to be very useful for traders to decide and accurately, quantitatively say, on a per trade basis, I'm going to trade $5 per $100 of my portfolio. And what's important here is on a winning trade, so let's say you're up that 5%, and suddenly you have $110 in your $100 portfolio, your next one, you should continue to follow the F star. So 5% of that $110 again, so that will be about $550. In conclusion, thank you all for your time. Managing emotions is an important part of the trading process. No one wins all the time, contrary to crypto, Twitter, and what some people may say. Everyone has their own processes. But I think the most important part is just managing and understanding and recognizing as an individual that your emotions may be impeding your trading abilities and success. So, thank you all for your time and attention. I'll pass on the time, and I think there's an esports tournament happening soon after me. So I hope that you guys can enjoy. Thank you.